Alright, here we go. This is Seewing Yee from the Year Listen Network. This is the mother of all presentations on a historical basis with the Year Listen Network. Alright, here it is. Without further ado, here's the topic I'm going to talk about. Think like a hedge fund manager. Blueprint to replacing your paycheck. Buy in bulk, buy portfolios. The Midwest markets. That's right. All right. Over the past few years, hedge funds, private equity funds, and the biggest banks have raised massive amounts of capital to buy distressed or foreclosed single-family homes, often in bulk at bargain prices. Their strategy is to convert them to rental units before selling them when prices appreciate. Well, as a mom and pop real estate investor, you may be able to become a hedge fund investor on a much smaller scale, of course. However, the principle is the same. Do you have $100,000 or more in your IRAs or previous employers' 401ks? Do you have $100,000 or more in cash? Do you qualify for financing? Then, in my definition, you qualify as a hedge fund investor. So the first step is contact me, of course, Seewing Yee. After our initial consultation, I will determine if you're the right fit. If you are, then I will let you know how we will work together, what my fees are and services are, as well as any other important details. All right, getting back to this. The best markets to buy? The Midwest. Our top 5 markets: Buffalo, New York, Detroit, Michigan, Memphis, Tennessee, Cleveland, Ohio, and Philadelphia, Pennsylvania, and a handful of Midwest sub-markets. All of these markets are experiencing bidding wars and multiple offers. Consequently, our network partners have no choice but to prioritize who they will sell their limited inventory to. These markets can provide the highest historical returns, up to 15% capitalization rates. And if you use financing, around 30% cash on cash returns. Mind-boggling. So the typical price range in these Midwest markets, as we discussed, are single-family homes around $40,000 to $60,000 price ranges. Duplex, $60,000 to $100,000, give and take. Triplex, $100,000 to $150,000, and fourplex, $150,000 and up. All right, let's go over the highlights. The top 10 reasons to buy now. 1. Massive demands, not enough inventory. Once we receive our weekly inventories, they are sold within 24 hours or less. 2. We have 1% vacancies in all of our markets. That's right. 3. Historical returns, highest, up to 15% capitalization rates. Again, if you use financing, it's 30% cash on cash return. 4. It's all turnkey. Good system we have that I developed over the years. All the homes, almost pretty much all the homes are pre-leased, rent ready, and completely rehabbed. Right? Very important. Everything is in place. Tenants, property management, etc. 5. Window of opportunity. Who knows? Maybe 6 months to a year. Then after that, all the good deals could be gone. You snooze, you lose. 6. Savvy domestic investors from all over the US, California, New York State, Texas, all the motivating high net worth investors from all over the US, homegrown investors, as well as investors from overseas, such as the United Kingdom, Israel, Canada, Australia, South America, and China, are also buying aggressively in these markets. Better believe it. 7. The remaining 40 US states will not cash flow. Cap rates are too low and returns are too low. I know most of our so-called members are located in the Bay Area, mainly in the San Jose area. Again, do not buy where you physically live in California. The worst place to buy rental properties right now. All right. Well, California is one of 40 US states where I do not recommend you should buy rental properties going forward for the reasons I just stated. All right. Number 8, a great opportunity to buy at the bottom of the real estate cycle. Number 9, time the market. Buy now. You will never see these returns again in your lifetime. You will never see prices this low again. Housing prices in these markets will inevitably rise in the future. Why? Population and job growth. Very simple. You don't need to be a rocket scientist to determine this. Lack of homes, lack of sufficient new constructions. Yeah, it's a function of demand and supply, right? When demands exceed supply, then you're going to make some money. Simple. And last but not least, number 10, the top 10. You can make money or you can make excuses, but not both. All right, entrance strategies, buy strategies. You make your money when you buy. Most of these properties in these markets that we're promoting, you buy below market value. Very important, obviously. Okay, there are 7 entrance strategies. 1, buy all cash or a self-directed IRA, right? 2, after closing, you could refinance and leverage and buy more properties. Then repeat the process afterwards. Number 3, buy with 20 to 25% down investment loan financing. 4, buy and hold long term. 5, buy and flip short term. 6, buy a portfolio of homes all cash. If you have the money, that'll be great. Ideal. And number 7, buy a portfolio of homes with financing with only one loan in a portfolio loan package. Let me give you an example. Let's say you're going to buy 4 or 5 of these investment homes. You're going to use one mortgage loan with 20 to 25% financing, right, per property. So those 4 or 5 purchases with mortgages on each property, you can wrap it into a one loan portfolio package, right? That's a very efficient way. So very good creative financing, so which is very much doable. Of course, we have the connections and the resources. I will talk about it a little bit more. All right, so we just finished the top 7 entrance or buying strategies, right? Isn't that great flexibility? Yes, it is. Okay, let's talk about exit strategies, right? I think you know what I'm talking about. So there are 3. One is flip in 6 months to a year. 2, you do a 1031 tax-deferred exchange. And 3, hold for the long term. All right, bottom line. Highest cash flow, highest cap rates, highest total return on investments in the country in this Midwest market. Make money short term or long term. Wow. That's what we want, right? We want good options. We want good flexibilities with our real estate portfolio. All right, let me show you a sample quote unquote hedge fund portfolio below. Okay, you can buy a $57,000 house in Detroit, right? You can buy a $51,000 single family home in Buffalo, New York, and you can get financing with this Buffalo, New York property, by the way, but not in Detroit. It must be all cash or IRAs only. Another property in Buffalo for 78,000, a duplex. You can, and then finally a $70,000 triplex in Cleveland. All right, so it's just you know just a typical portfolio you can accumulate all at one time, or buying one property after another, every month or so. Okay, it all depends on your situation, of course. So, do you like this package? I hope so. It's very much doable. Again, if you have the financial resources, if you're very motivated, you buy in bulk, wrap it into one portfolio loan, as I mentioned. Okay, in this particular case, these four properties, you can get financing on all four individual properties and yet wrap around in one portfolio loan. So you can get dinged for only one inquiry, saving on closing costs and other fees associated with buying. If you were to buy different properties with different mortgages, you can wrap around in this portfolio loan, one package, one loan hit. Right? So do the math. How many of these properties can you buy to ultimately replace your earned income? Okay, just do the math. It's not that hard. So, do you have the right stuff? Oh, that's a movie that came several decades ago. Uh, I think starring Dennis Quaid and Ed Harris. The right stuff is about a group of astronauts. Anyway, try to Google that movie, The Right Stuff. Do you have the right stuff, right? Do you have what it takes to become a hedge fund investor? Right? You're in the business of real estate. Put yourself in the shoe of a hedge fund investor. I'll teach you. Okay? Not that difficult. And are you committed to reach your financial goals in the fastest, most efficient means possible? I hope so. Again, the first step is to contact me, Seewing Yee, and we can do an initial strategy session, and then over the phone or otherwise, then I will determine if you are the right fit, if you are potentially the right investor that I should work with. If you are, then I will let you know how we can work together, how I charge for our services, and other important details. All right, and of course, the remaining information here on this presentation. Of course, Richard Avani, you can get the loan pre-approval, okay, and you gotta get that way before you even consult with me. If you wanna use your IRAs, contact Brian Davis, all right, to do your self-directed IRA. And of course, if you want to use the portfolio loan strategies, then contact Mr. Daniel Molina. Well, ladies and gentlemen, thank you for listening. I hope this presentation was very inspiring. At the end of the day, it's all about you. How are you motivated, right? What's your motivation? What's your commitment? Are you inspired to make changes to your financial situation? Are you ambitious, right? Are you going to prioritize your time to do real estate investing, right? Those are the critical questions. But we can address that during our consultation. Then we go from there. Right? Thank you so much for your time. This is a very unique presentation. This is one of the most significant strategy that our network history has undergone. So I'm sure this is a very exciting time. So, and hopefully I can hear from you and I will work with you one-on-one to achieve your financial goals. This is Seewing Yee from the Eurolisten Network. Thank you for watching. I will see you on the other side. Goodbye.